Hey, hello everyone, guys. Hello everyone. Good evening. How are you all? Good evening, everyone. Where are you all? Everyone, just please comment about the audio and video as everything is working fine. Hello, good evening, everyone. Good evening. So, welcome to today's session. So, today is actually IEIFS Module C, Unit 21, and the unit name is Indian Banking Structure. We are going to discuss about the Indian banking structure. I am giving you a short overview of this chapter. Okay, so a short overview is given to you, and if you want to learn the complete chapter, you can enroll in the paid batch in the Oliveboard app. So let's start discussing this chapter. First of all, if we talk about the banking, what is banking? First of all, banking is defined under Section 51B of the Banking Regulation Act. So, what is banking? Banking is a process, or banking is an act of receiving money or taking deposit from the public in order to lend or invest in the market. Any institution who is performing these two main activity is known as the banking institution, and a banking is an activity of taking deposit from the public in order to invest, in order to what lend in the market. That is known as banking. Clear? Now, next, if we talk about the banking system, history of banking in India, if we talk about the history of banking in India, the very first bank which was established in India was known as the Bank of Hindustan, and it was established in the year 1770, and it was established in Calcutta. It was the European bank which was established in India, and it was established by Alexander and Mazur Company. Next, there were various other banks that have been emerged after the Hindustan Bank, like there was General Bank of India, there was Oud Commercial Bank. However, these banks were not able to continue for a very long time. Third, if we talk about the evolution of a State Bank of India, so you must know that there were three banks which were working in the economy earlier, and that banks were known as the Presidency Bank. Bank of Calcutta, Bank of Bombay, and Bank of Madras. These three banks were merged into Imperial Bank of India in 1921, and the Imperial Bank of India actually was nationalized in year 1955, and the name was changed as a State Bank of India. Next, 1920 and 30, if we talk about this time period, this was the time period of extreme turbulence in the banking system in India, because in this time period there were approximately more than 500 banks which were failed in this time, because there was no regulatory authority, there was no rules and regulation regarding the functioning of the bank, and that's why there was failure of approximately 500 to 600 banks in between 1920 and 1930. And that's why the Hilton Young Commission recommended the Reserve Bank of India in year 1930. The recommendation actually was done in 1926, and the establishment of RBI was done in 1935. Okay, now if we talk about the government actually nationalized 14 large commercial banks in year 1969, which have a deposit of more than 50 crore, and the second nationalization was done in 1980, or this was the six banks which have the total deposits of 200 crore. So this nationalization was actually done by Indira Gandhi government. So Indira Gandhi government has actually done this nationalization. Okay, done. Now, next, if we talk about the important acts or legislation which is related to the regulation of banking system in India, so there is obviously the very first Reserve Bank of India Act 1934. You just have to remember that the year in which this act was finally passed. Okay, the Banking Regulation Act 1949. Sorry, there was State Bank of India Act 1955. There was State Bank of India Subsidiary Bank 1959, the Deposit Insurance and Credit Guarantee Corporation Act 1961, the Banking Companies Act 1970, the Banking Companies Act 1980, the State Bank 2018. So these were the important legislations and the act which was working in the banking environment. Okay, next, there were different type of banks which are actually working currently in India. If we talk about the first, that is known as the scheduled bank. Scheduled bank are those bank which is actually registered under second schedule of RBI Act 1934. So whoever the act which bank which was actually registered under second schedule of RBI Act 1934. They are termed as a scheduled bank, and the paid up capital and the raise fund must be at least 5 lakh for this bank. Non-scheduled bank, very simple, the bank which is not or which are not listed under second schedule of RBI Act 1934, they are termed as non-scheduled bank. So scheduled bank, they are listed under second schedule of RBI Act 1935, and non-scheduled bank, these are those banks which are not listed under second schedule of RBI Act 1930. Okay, next, if we talk about the minimum capital requirement for a non-scheduled bank is governed under Section 11 of Banking Regulation Act 1949, whereas the capital requirement of the scheduled bank is governed by Section 42(6) of RBI Act. So the minimum capital requirement, which is actually for the non-scheduled bank, it under the Banking Regulation Act 1949, and here the regulation is done under the RBI Act 1934. Okay. Now, next, if we talk about the next type of bank, this is known as the public sector bank. Now, what are public sector bank? Public sector banks are those bank in which the government share, the share of the government is actually more than or equal to 50%. So all those bank in which the government share is actually more than or equal to 51%, then these banks are known as the public sector bank. Now, what are the public sector banks? So currently there are 11 nationalized bank right now, because see, Indira Gandhi has done the nationalization of 20 banks in her time period. Okay, 1969 14 and 1986 bank, but with the time period there was the merger of the bank, and due to which currently there is 11 nationalized bank. SBI, which has 7 subsidiaries earlier, were merged with two State Bank of India in year 2008 and 17. So between this time period, the State Bank of India earlier, which have 7 subsidiaries like State Bank of Bikaner and Jaipur, Patiala, Hyderabad, Mysore, Travancore, these were the subsidiaries which were again merged with the State Bank of India. In 2008, Bank of Saurashtra, State Bank of Saurashtra, State Bank of Indore merged into SBI. Hyderabad, Patiala, Travancore, Mysore, and State Bank of Bikaner and Jaipur was merged into SBI in year 2017. Okay, so these were the merger of the SBI which has taken place. Okay, next, if we talk about the merger of the nationalized bank, when we talk about the Indira Gandhi has done the nationalization of 20 bank. In year 1993, there was the first merger of New Bank of India into Punjab National Bank. Then again in year 2017 or 18, I guess, here two Bank of Baroda and Vijaya Bank. Vijaya Bank and actually Dena Bank. These banks were merged into Bank of Baroda. So here one bank, New Bank of India, merged into Punjab National Bank. Here two banks, Vijaya and Dena, merged into Bank of Baroda. Then these were the merger where Oriental Bank of Commerce and United Bank of India merged into PNB, Allahabad Bank, Indian Bank, Syndicate into Canara, and Corporation and Andhra Bank into United Union Bank of India. So see, 1 here, 2 here, 3, 4, 5, 6, 7, and 8, 9. So 9 banks were merged. 20 banks were nationalized by Indira Gandhi and 9 were merged, and that's why currently there are only 11 nationalized banks which is left right now. Okay, now next, if we talk about the private sector's bank, so all those bank in which the government share is actually less than 51%, these banks are known as the private sector bank. Now there are old private sector bank which was set up before the nationalization, and there were new private sectors bank which were set up after the nationalization. The minimum paid up capital in a private sector bank presently is rupees 500 crore. Okay, next, if we talk about the guidelines of the commercial bank, some guidelines, first of all, the universal bank. First of all, there are some universal banks guidelines which are under the private sector bank. Universal banks means these are those banks which does not have a differentiated work. Universal bank are those banks which actually provide you the banking services in every possible area. Okay, they are in the mutual fund business, also insurance business, infrastructure business, lending, receiving, every business. So if a bank is giving you the every possible financial services, so they are known as the universal bank. And for setting up the universal bank, the minimum paid up capital should be 500 crore, and the bank should maintain net worth of 500 crore at all time. They should be listed in a listed stock exchange, and the bank should open at least 25% of its branches in the unbanked rural areas. Lastly, there are foreign banks. Foreign banks are those banks which have their headquarter outside India. Those banks which have their headquarter outside India but have their branches inside India. These banks are known as the foreign banks. Lastly, there is a concept of regional rural bank. First of all, the regional rural bank was set up by the Narsimha Committee. The very first regional rural bank was set up on 2nd October 1975, and the name of that regional rural bank was Prathama Gramin Bank, or you can say Pratham Gramin. When a regional rural bank is going to set up, 50% of their capital requirement is by the central government. The contribution is by the central government. 35% of the contribution is by the sponsor bank, and third 15% of the contribution is by the state government. Okay, now what are the objectives? First of all, to bridge in the gap between the rural areas. Second, there should be a good outflow of financial services to rural areas, as well as the employment generation in the rural areas. So these are the different functions and objective of a regional rural bank. Okay, so this is the short overview of the chapter. Next, now, if you want to learn the complete chapter, you can buy the Super Elite subscription, which actually offers you a wide range of courses. You don't have to buy every single course individually. There is a wide range of the courses that you can buy in the Super Elite subscription. Okay, this is a all-in-one plan. You will receive the PDFs and mocks and everything in this. And currently, there is a sale which is ends on 23rd of August, and buy this if you are going to buy subscription before this 23rd August sale, then you will get a 46% off on JAIIB and CAIIB subscription. These are the prices. Original price for 12 month it is 7499, and for 24-month it is 12,999, means 13,000, in which you are getting a 46% flat off in the Super Elite subscription if you are going to buy it before 23rd of August. Lastly, these are some of the batches you will receive in the Super Elite subscription. There is an individual master batches also, there is a combined batch also, English medium batch also, Hindi medium batch also. You will get the access of each and every bank. Okay, so thank you so much, guys, for joining this session. I hope that you have all enjoyed this session. If you have enjoyed this session, just please like the video, share the video. And if you haven't subscribed this channel yet, guys, please subscribe the channel and press the bell notification icon. Thank you so much, all of you guys. Thank you so much. Till then, take care, everyone. Thank you so much for joining this session. Thank you. Bye bye. Take care, everyone. Bye, guys. Take care. Thank you.